Hello, fellow investors in Singapore. It's Iggy here from Investing Iguana, bringing you an in-depth look at one of the most talked about topics in our investment community. Today's episode, The Ups and Downs of Keppel DC REIT in 2023, a critical analysis, is going to dissect the turbulent journey Keppel DC REIT faced throughout the year. We'll dive deep into the REIT's unexpected exit from the STI, its struggles amid rising interest rates, and the unfolding tenant issues that have rocked its financial boat. In this video, I'll unravel these complex scenarios and what they mean for investors like you. Whether you're a current unit holder or considering an investment in REITs, this analysis will offer crucial insights into the challenges and resilience of Keppel DC REIT. So, get ready to uncover the truths behind the headlines and understand the real impact of 2023's events on Keppel DC REIT. As we bid farewell to 2023, it's an opportune moment for Singaporean investors to reflect on the tumultuous journey of Keppel DC REIT's share price. For unit holders, this year marked a period of navigating through uncharted and choppy waters, filled with an array of uncertainties and new challenges. The STI shuffle, a shocking turn for Keppel DC REIT. In a move that caught many off guard, Keppel DC REIT was ousted from the esteemed Straits Times Index, STI, on June 19, 2023, ending its almost 3-year stint. The newcomer replacing it was s-reits, a company grappling with a 5-year losing streak. This exclusion of Keppel DC REIT, known for its solid profit track record, certainly jolted its unit holders. The prestige and enhanced trading liquidity that come with being listed in the STI were evident when Keppel DC REIT's share price soared to a record high of $3.05 shortly after joining the STI in October 2020. Understandably, some unit holders might feel disheartened by its replacement by s-reits. The silver lining amidst STI exit. However, it's important to note that being part of the STI can bring its share of volatility due to short-selling activities. Keppel DC REIT's share price has experienced its fair share of ups and downs. But, surprisingly, its exit from the STI didn't significantly rattle its share value. In fact, the REIT's shares hit a high of $2.30 on July 27, 2023, suggesting that the STI exit was, in essence, a non-event for the stock. Keppel DC REIT, weathering the storm. 2023 was a challenging year for Keppel DC REIT. Its exit from the Straits Times Index, STI, and the financial turbulence due to rising interest rates and tenant issues posed significant challenges. However, in the world of investing, adversity often breeds opportunity. As we step into 2024, there are several factors to consider. Market resilience post-STI exit. Keppel DC REIT's exit from the Straits Times Index, STI, was a significant event. The STI is a major stock market index which represents the performance of the top 30 companies listed on the Singapore Exchange. Being part of the index can provide a company with increased visibility and can potentially attract more investors. Therefore, exiting the STI could have been a major setback for Keppel DC REIT. However, despite this exit, Keppel DC REIT demonstrated resilience. This means that even though it was no longer part of the STI, the company was able to maintain its performance and continue to attract investors. This resilience is a testament to the company's strong fundamentals and its ability to withstand changes in the market. Looking ahead to 2024, the focus for Keppel DC REIT will likely shift. Now that it's no longer part of the STI, the company won't face the same pressures related to index performance. Instead, it can focus on leveraging its strengths in the data center sector. Data centers are facilities used to house computer systems and related components, and they are critical for the functioning of the modern digital economy. By focusing on this sector, Keppel DC REIT has the opportunity to carve out a strong position for itself and continue to provide value for its investors. Interest rates and debt management. Interest rates play a significant role in the financial health of a company, especially for real estate investment trusts, REITs, like Keppel DC REIT, which often carry substantial debt due to the nature of their business. When interest rates rise, as they did in 2023, the cost of borrowing increases. This means that the interest payments that Keppel DC REIT has to make on its debt also increase, which can impact its financial stability. In 2024, a key focus for Keppel DC REIT will be managing its debt profile. This involves strategies to handle its existing debt and finance costs in the face of these higher interest rates. One such strategy could be refinancing its debt. Refinancing involves replacing existing debt with new debt at different terms, potentially more favorable ones. If the economic situation allows, Keppel DC REIT might be able to lock in lower interest rates through refinancing, which would reduce its finance costs. However, these strategies require careful planning and execution. The goal is to maintain financial stability, ensuring that the company can meet its debt obligations without compromising its operational efficiency or profitability. By effectively managing its debt profile, Keppel DC REIT can navigate the challenges posed by higher interest rates and continue to thrive in its business. Tenant relationships and risk management. Keppel DC REIT, like any other real estate investment trust, REIT, relies on its tenants for its income. The rent paid by these tenants is the primary source of revenue for the REIT. However, issues with tenants, such as those experienced with Guangdong Blue Sea and DXC technology, can pose a significant concern. These issues could range from delayed payments to contract disputes, and they can impact the REIT's revenue and overall financial health. Moving forward, it will be crucial for Keppel DC REIT to focus on strengthening its relationships with its tenants. This could involve regular communication, addressing tenant concerns promptly, and ensuring that the terms of the lease are beneficial for both parties. At the same time, Keppel DC REIT will need to diversify its tenant base. Having a diverse range of tenants can help mitigate risks associated with any single tenant. If one tenant faces issues, the impact on the REIT's overall revenue is lessened. The ability to attract and retain reliable tenants will be a critical factor in ensuring a steady rental income for Keppel DC REIT. Reliable tenants are those that consistently pay their rent on time and adhere to the terms of their lease. By focusing on these areas, Keppel DC REIT can navigate the challenges posed by tenant issues and continue to provide value for its investors. Leveraging the data center demand. Data centers are facilities that house computer systems and related components, such as telecommunications and storage systems. They are essential for the digital economy, providing the infrastructure needed to support a wide range of online activities. The demand for data centers is growing globally, driven by factors such as the increasing use of cloud services, the growth of big data, and the proliferation of digital technologies. Singapore, with its robust infrastructure and strategic location, has emerged as a key hub in the data center sector. Keppel DC REIT, a real estate investment trust that owns a portfolio of data centers, is well positioned to capitalize on this growing demand. Its assets in Singapore and other key markets give it a strong foothold in the industry. Looking ahead to 2024, there are several strategies that Keppel DC REIT could pursue to take advantage of these opportunities. One option is to acquire more data centers, expanding its portfolio and increasing its capacity to meet the growing demand. Another strategy is to develop its existing assets, for example by upgrading facilities or increasing efficiency. These strategies could provide significant growth opportunities for Keppel DC REIT, helping it to thrive in the burgeoning data center market. Sustainable operations and ESG focus. Environmental, social, and governance (ESG) factors are a set of standards that socially conscious investors use to screen potential investments. Environmental criteria consider how a company performs as a steward of the natural environment. Social criteria examine how a company manages relationships with its employees, suppliers, customers, and the communities where it operates. Governance deals with a company's leadership, executive pay, audits and internal controls, and shareholder rights. Investors are increasingly focusing on these ESG factors when making investment decisions. They are looking for companies that not only deliver financial performance but also show a commitment to sustainability and responsible operations. Keppel DC REIT, a real estate investment trust that owns a portfolio of data centers, has shown such a commitment. Its focus on sustainability and responsible operations aligns with the ESG factors that many investors now consider. This could enhance Keppel DC REIT's appeal to a broader investor base, including those who prioritize ESG factors. Moreover, this commitment could potentially open up new funding avenues for Keppel DC REIT. Investors who focus on ESG factors might be more willing to invest in the company, providing it with additional capital to grow and expand. Therefore, Keppel DC REIT's focus on ESG factors could be a key element of its strategy for future success. In conclusion, 2024 appears to be a year of strategic recalibration for Keppel DC REIT. The focus will likely be on debt management, tenant relationship strengthening, capitalizing on the growing data center market, and enhancing ESG practices. For investors, monitoring these aspects will be crucial in assessing Keppel DC REIT's potential as a key player in their investment portfolios. As always, staying informed and adaptable in the ever-changing investment landscape will be vital for success. And that's a wrap on our critical analysis of Keppel DC REIT's eventful year in 2023. Thank you for joining me on this enlightening journey through the highs and lows of one of Singapore's prominent REITs. I hope this episode has provided you with a clearer perspective on the complexities of REIT investing and equipped you with knowledge to navigate similar situations in the future. If you found this analysis helpful, please show your support by giving us a like. Your engagement is what fuels our channel and helps us continue to bring you insightful content. Don't forget to subscribe to Investing Iguana for more in-depth analyses of Singapore's dynamic investment landscape. If you have any thoughts or questions about Keppel DC REIT or REITs in general, feel free to drop them in the comments below. Let's keep the conversation going. Until next time, this is Iggy, reminding you to stay informed and invest wisely. See you in our next financial deep dive.